Joining me now is Lisa Ellis. She covers payment stocks for MoffettNathanson. I mean, I tried to characterize it as best I could in 30 seconds. It's obviously a much more complex story than that, Lisa. But can you take us through why there is a little bit more pessimism in Amex stock today versus kind of what they told us as a more bullish macro narrative?
Yeah, so you hit on it. They missed on revenues, which is unusual. They've been beating actually quite handily the last several quarters. They missed by about 3%. It was driven by a sequential downtick in their billed business volumes. That's the spending volumes on cards, which came in at an 8% level in the quarter. Not a bad number on an absolute basis, but well below expectations. Last quarter, that number was 16, to give you a sense for it. And the weakness was really in two places. Travel, not that it was weak, it was still up 14% year on year. But last quarter, while we were lapping Omicron, it was up over 30%. So, we're sort of returning to normalcy a bit on travel. It's been this huge surge over the last 6 quarters. And then the other sort of unexpected area of softness was actually U.S. small businesses, where their spending was only up about 2% year on year. That was the one that was, I think, a little bit of a head scratcher. But more positively, U.S. consumer spending, very healthy, 10%, and international spending also very healthy, 17%. And the credit metrics at Amex continue to just be astoundingly strong. So a lot of good news in there, but the headline number was the miss on volumes and revenues, which is what's causing the weakness in the stock.
Lisa, how much can we really glean about the maybe overall health of the American economy and the U.S. consumer with American Express? I ask this not because I'm knocking American Express, more so because American Express has a very different customer than many other banks and credit card issuers have. They're higher end and maybe a little bit not indicative of the broader economy. How much of that can we kind of take into account given the story that we have, the macro narrative in the U.S. that we have?
Yeah, you're right. I mean, they, of course, skew very affluent. And actually, if anything, coming out of the pandemic, have been gapping even further away from their peers in terms of the skew toward the more affluent consumer. So they disproportionately reflect spending in the economy because, of course, affluent consumers drive a disproportionate amount of spending. But they are only about 15% market share of all U.S. card volumes, and it skews very affluent. So probably their results are particularly the credit metrics, which are really strong, are an early indicator of this kind of bifurcation we're starting to see a bit. Earlier this week, Goldman Sachs's credit metrics came in really weak, where we maybe are seeing a little bit of degradation in the middle income consumer, while the affluent consumer remains really healthy.
Okay, and before we let you go, I want to kind of spin forward to what we're going to see here with some of the payments processing networks like Visa and MasterCard. Visa in particular, it's kind of on deck, if you will. So what's different between the payments processors and the credit card networks as opposed to an American Express, which is much more diversified in terms of its exposure?
Yeah, so Visa and MasterCard are much more global in nature. And so we are likely to see a little bit stronger volume growth there because internationally, there's still a lot stronger growth coming out of the pandemic. But on the flip side, they're a much broader representation of just the health of the overall economy. Their mid-quarter metrics have come in a little light, particularly for the U.S., where their volumes, Visa reports an interquarter number. It was only up about 6 or 7%. So, I wouldn't be surprised, especially given Amex's results today, if the volume numbers for Visa and MasterCard, maybe come in a little bit at the lower end of expectations. But that said, I will point out in terms of the stocks, Visa and MasterCard have been sort of collateral damage of the big shift and migration into these AI stocks this year. And Visa and MasterCard have derated about 10% despite beating on revenue and EPS for 9 straight quarters. So even if we see a little bit of softness next week, we view this as a really, really attractive entry point, particularly into Visa, because their valuations, have really, for technical reasons, have derated a bit this year.
All right. Lisa Ellis, MoffettNathanson says Visa is a top pick there. Thank you very much. Have a nice weekend. We'll see you soon.